Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about AARTI drugs. Is it worth a look or an avoid at these levels? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about AARTI drugs, I have a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you will have access to my watch list, my portfolio, and a number of podcasts that I put up from time to time. Also, you can pay $100 upfront and you get 12 months access by paying for 10 months, and the membership now can be accessed as earlier. So there is no restriction. They have rectified the problem that was there after the RBI rule came in. So the problem has been rectified and people are getting the membership, so you can try your luck there. If you can't get that membership, you can join on YouTube. You get all the benefits of Patreon by joining on YouTube through UPI payments or through Google Pay, and you will also get 4 live sessions which are members only session every Friday. Now about the company, AARTI Drugs was established in 1984 and is part of the AARTI group. They provide API products, pharma intermediaries and specialty chemicals, and they also produce formulations. So they are also into specialty chemicals, which has been doing well. Pharmaceutical has taken a back seat for the while, but going forward should do well. So products under APIs includes ciprofloxacin, hydrochloride, then there is also metronidazole, and there is metformin HCl, there is ketoconazole and ofloxacin. So a lot of products which are quite common in India and abroad, which are commonly used for various illnesses, are being produced by AARTI Drugs, and that's why the valuations shot up after its listing. Specialty chemicals includes a benzene sulfonyl chloride and also methyl nicotinate, which is a very important, you can say, ingredients in many of the products that are produced globally. So this is also a renowned specialty chemical products that they sell. They export around the globe, including USA. So they have different export orders also available to them. The valuations have corrected over time and looks attractive at this moment. So if you look at the financials, so these are Q1 numbers of FY22, these are June quarter numbers. So a growth of 7%, but the profit dipped by 44%, and that has spooked the market, and that is why the stock has gone down by at least 20-25% from the top, because there are a lot of companies which are producing 20 to 30% profit growth at the moment with low base, and there's opening up trade going on, and that's why the stock has gone out of favor. DIIs are selling into the stock for the last 2-3 quarters. There is high promoter holding, and the ROE is around 23%, which is robust. Operating profit margin around 18% is above average and looking good, but the numbers need to improve. It cannot be, or they cannot be a 40-50% year on year dip in profitability, and the stock is expected to do well. It cannot happen like that. If you look at the performance, then stock has been an underperformer for the past few months. So it hasn't been doing well, and the reason for that is the last 2 quarters has not been that great. It has fallen around 40%. See, it had surged 8x, so from 120 130 levels it had gone all the way to 900,000, but it has corrected. Market cap at that moment swelled to around 7,000 crores, but now it has reduced to around 5,000 crores or so, and currently the stock is trading at around 23 times earnings, 24 times earnings, which is reasonably priced. But you need to understand that the numbers have to follow, and otherwise the stock may just continue to fall. Stock has rewarded long-term investors who have bought it early at around 120, 150, 180, all those levels. But now I would say that you need to first look at numbers, and numbers need to improve before you get into the stock. So what are the salient feature? High sales and profit growth record until recently. Until the last 2 quarters, it has been doing very good, 20-25% sales growth, 30-35% profit growth. But now things are looking bit jittery. Consumer medicine products are under its belt. This is a very good thing. It is backed by the AARTI group, which has been doing well. You look at AARTI Industries, AARTI Surfactants, everything is doing much better. I think this would also make a comeback. So somebody who wants to hold say 3 to 5 years, yes, these are good levels to accumulate. Valuations were in favor 6 months back. It has got stretched, but now it has come back to those levels where around 23 times it looks pretty good. So it is not that the valuations are very much stretched, but then again, if the numbers keep on dropping, then I would say that the valuations are not quite up to the mark and the stock may correct further. So consistent business growing forward could be there, but I think margins are contracting, and that is one reason why the stock may remain under pressure. Sector has been a top favorite among traders and investors recently, but now there has been a sectoral change or churn that has taken place. But I am pretty sure if you talk about the sector, the pharmaceutical sector, I think things will come back after 2 3 months. I think this move in the risk, you can say risk related sectors, or you can say assets which are more into construction, real estate, infrastructure ancillary, etc., may continue for a couple of months till Diwali, post Diwali, but after that you will see a lot of move in pharma and IT as well. So in that sense, I don't see the sector going out of favor at all. But for the stock to do well, the numbers have to be consistent and consistently growing. So whether the valuations are stretched at 23 times current earnings, it looks reasonably valued. I don't think the valuations are stretched. In fact, at these valuations, if the numbers improve, then these are very good levels to get in. But you need to look at the next 2 quarter numbers as to how things are, and then gradually get into the stock. The pharmaceutical pack normally trades between 15 to 20, 22 times. So I would say that any 10-15% fall from current levels will be a very good buying opportunity, because then the valuation will be around 19-20 times, which would be very good for somebody to buy a long term. So maybe it would be at the end of consolidation after a 10% fall. I think we will see a recovery, because no stock falls forever and no stock goes up forever. So I don't think that the correction will continue if it can be accumulated 10% down from current levels. So this is an opportunity to accumulate, in my sense. If you have a 4 5 year view, these are very good levels to I think to accumulate. So what needs to be done? In my opinion, can buy for long term at current market price, but better pharma stocks are available. So I have talked about DVs, Dr. Reddy's, then there are other stocks in the same field, even Syngene for that matter, that has not performed as far as R&D is concerned, looks pretty good. And then there are others like into other businesses like Alchem Labs is there, and there are other companies as well, which could be advanced enzymes, etc., which have not moved, may continue to move. So there are many companies. I have named a few, but there are many companies that somebody can look at. But as far as AARTI Drugs is concerned, I think recovery will take place if you have a 3 to 4 year view. Yes, these are very decent levels to get into. So this was my video on AARTI Drugs. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon and join me on YouTube. And hopefully, inshallah, you'll get benefits. Thanks a lot for watching.